After last Monday's sharp 3.3% drop, gold's been in consolidation mode. So what's fueling the battle between the bulls and bears? And as December kicks off, is a Santa Claus rally on the cards. Don't miss this week's As Good as Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. After the sharp pullback on November 25, gold has been pretty flat over the last week. The easing of geopolitical tensions and the confirmation of the new U.S. Treasury Secretary have taken some steam out of the bullish side, while the growing chances of a December Fed rate cut and Trump's tough stance on potential tariffs have helped to put a floor. This week's U.S. non-farm payrolls report and speeches from Fed officials led by Powell could give traders a clearer idea of where interest rates are headed, and that will absolutely impact gold trading. So in today's video, I'll break down some quick technicals on gold, go over the key factors driving the price action, and finally highlight the risks to watch for the week ahead. Let's jump right in. Looking at the gold against US dollar daily chart, we can see gold has been bouncing between $26.20 and $26.60 over the past week. While there's been some slight upside recovery, the long wicks on the candles tell us that neither side has really gained full control, and traders are taking a wait-and-see approach. If the bears keep up the pressure, $2,600 is a key support level. And on the flip side, if gold wants to push higher again, the price action around the 50-day moving average and the September high of $26.85 is going to be crucial. While gold is currently stuck in a bit of a limbo, which shows the markets lacking any clear or, I would say, decisive updates. I think gold's pressure right now is mainly coming from the gradual shift in pricing political developments. In the US, the full confirmation of Trump's cabinet, including the new Treasury Secretary, Scott Bessent, who's seen as more of a fiscal hawk, should ease some concerns about a rapid growing federal deficit. And globally, the temporary ceasefire in Lebanon has calmed the situation in the Middle East for now, which has reduced the need for gold as a safe haven asset. Meanwhile, US economic data has been pretty solid too. Q3 GDP came in at a healthy 2.8% annual growth, with consumer spending up 3.5%, which is the strongest this year. The University of Michigan's Consumer Confidence Index and durable goods spending also saw a nice bounce. On top of that, the November ISM manufacturing PMI beat expectations, showing lower prices paid and new orders in expansion territory. This positive economic momentum is a short-term headwind for gold, as the U.S. exceptionalism story keeps strengthening. However, inflation is starting to creep back onto the radar. October's U.S. CPI ticked up to 2.6% year-on-year, with core CPI jumping to 3.3%, and PCE also rebounding. While one data point isn't enough to draw any conclusions, and the market is still pricing in 75% of chance of a 25 basis point Fed rate cut in December. If inflation keeps climbing, traders might begin to question whether the Fed will actually cut rates in Q1 2025, and that could push gold even lower. Also, Trump's warning on social media about the de-dollarization by the BRICS countries, especially with the potential 100% tariffs, is adding pressure on gold. But the ongoing political crisis in France and the threat of a trade war could pose challenges to the global economy in the medium term, which could give gold a lift. So all in all, gold's been pretty range-bound recently. The confirmation of Trump's cabinet and the easing of geopolitical tensions in the Middle East have kept a lead on gold prices, while the market's growing expectations for a December rate cut from the Fed and Trump's hardline stance on tariffs have provided some support. That said, if gold is going to keep moving higher, it's going to need some fresh positive catalyst. Otherwise, with strong long-term support but a lack of short-term momentum, gold could stay stuck in this consolidation phase, meaning the much anticipated Santa Claus rally might not be materialized. Looking ahead, traders should pay attention to Powell's comments about the U.S. economic conditions and Fed's rate cut path for 2025. And of course, Friday's November non-farm payroll report is key. The consensus is for 200,000 new jobs added and unemployment rate holding steady at 4.1%. If the headline number comes in above 230,000 and the unemployment rate stays at 4.1%, the market could scale back expectations for a December rate cut, which would likely weigh on gold. But if the report comes in well below 100,000 and unemployment rises, it could lead to a rethinking of U.S. economic outlook, potentially sending gold higher. So that's pretty much all for this week. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming data and events may impact gold trading, drop a comment below and let's discuss. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!